Hi guys, this week we're looking to show you one of our strategies. It's a strategy we use quite often and it's a good solid strategy. It's not 100% perfect, no strategy is, but this should give you a good clear indication of when to enter a trade, when to leave the market alone, and a good way of identifying if the market is in a sideways motion. What we do is we start on the month view of the trade in question. So this month we're looking at the Australian dollar, US dollar. We have a month view here and we're just going to mark in a key line. If we look to the left, we can see where the market came up, pulled back down and then broke through this level here. So if we mark the level off, we can see originally the market bounced up towards this level, it couldn't break through and then pulled right back. This time the market hit this key level, broke through slightly, pulled back, indecision candle doji, then the market broke through. On the next candle it pulled back to this line, which is exactly what we would like on our strategy, and then the market continued up. When the market did pull back, we can see it didn't break this strong support resistance line. Further on through the year, we can see where the market consolidated and tried breaking through to the downside, but each time it kept closing higher. Now we see the market's risen, it's come back down, it's come near this support resistance line, near bounced up to the upside, and now it's pulled back down. This area here looks like a good consolidation area with potential to move to the upside, forming a new wave upwards. What we do is we now look at the hour candlestick to start our strategy. First of all, we need to identify the days of the week. These indicators here, where they've been segregated, is showing each day. So this is Friday, Thursday, Wednesday, Tuesday, Monday. So on Monday we shall highlight so we all know where we are. Friday, Thursday, Wednesday, Tuesday, Monday. Okay, I'll put Monday in here. So we now know this was the start of last week. And we can start now putting in our key indicators to start building the strategy up. Firstly, we identify the previous Friday low, and we can see the last 6-7 days previous to that the market was in a downtrend. Basically we've got lower highs and lower lows. This is where the market looked to turn, and now we need to identify how we could have found out if the market was going to the upside and where the market could potentially go next week and beyond. What we will do is we'll zoom in then. For our strategy, we are basically using the day's high and low with a key break. I'll put this in to show you. So on the previous Friday, this area here was the Friday's high. And here was the low. On the Monday, what we would have been waiting for is a key break of this high with a retracement near to that high line prior to a buy to the upside. So we can see the market broke up, it bounced towards the key high, it broke through, the market pulled back prior to a move to the upside. And this is where we would be looking to buy into the market. Our stop loss would have been the previous low here. So yes, there may be quite a large stop loss. If we look, say we were to get in here, our stop loss would have been 30 pips. But look where the market went to. Okay, so it was a good trade. If we miss this trade and we go to the Tuesday, all we do, same again, we put in our previous day's low. So this was the previous day's low here. And we will put in the previous day's high. around this level. And again, we will wait. We can see the market hit the high, it pulled back midnight, slowly bouncing up, touched, pulled back, straight through this time, a good strong candle. You could have been a buyer anywhere here if you were up early in the morning, or you could have waited around this level to be a buyer. Your stop loss though on this trade would have had to have been right the way down here, because this was the previous day's low. So although we can see what happened, this would have made it a very poor risk to reward. But we can also see that if we did get in the trade around this area, we had a good 20 odd pips. And I forgot to say that this strategy we only use for guaranteed 20 to 30 pips on every entry. Anything above 20-30 pips, we move our stop loss right up and we let the market go. Sometimes it can keep going 100 odd pips, or sometimes we can just get stopped out. But this is a 20 to 30 pip trading strategy, which we would have got on this day. Let's go to Wednesday now. So on Wednesday, if we still hadn't got into the market and we were waiting, we can put in the previous day's low here, and we can put the previous day's high in around here. So there we go. We can see on Wednesday we'd have been waiting, okay, because the market touched our previous day's low, but we didn't break through, and it resumed all the way up to the upside, and again it didn't break our previous day's high. So for this day we would have been sat out of the market, basically sitting on our hands waiting for the break on the opportunity. Again, we can move forward to the Thursday. All I will do this time is I will extend this level, because we can see I'll extend it all the way through to Friday so we can just have a good look. And here I'll extend this through. What this is showing us here is basically we've had a sideways market. Each day hasn't broken the previous day's low or high. Okay, there's our high, there's our low. We didn't break it here. It looked like we might have just touched it here. This is the high. We touched it, broke through, but we didn't continue the move to the upside, because this is what we're waiting for. Good strong break and close above, then a retracement prior to our buy. So again, we see in a sideways market. So now we can look forward to Monday, and I'll just put some levels in to show you. If this is the high previous, and we will put in the previous low, okay, on Friday, we can see here now that we're looking for a break to the upside to continue our strong upwards momentum on this trade. What I like about this strategy is you are not buying or selling on false moves of the market. You could have put a sell on here only to watch the market bounce back up and come back down, never going as low as your intended sell. So it saves you trading, it saves you paying for your spreads, but it gives you good trading opportunities using the simple rules and methods to get in and out of trades on 20 to 30 pip profit. Again, if we go back, if you'd have used this strategy on the Monday and you had entered the market, so let's say you entered around here and your stop loss was 30 pips and you let the market go, you would have got your 30 pips here. And like I say, on our 30 pip level, we normally bring our stop loss right up to around here. We would have at 30 pips. We'd have probably been in this trade further. Where we got in here, we got to 30 pip level around here. The market bounced around. You may have been stopped out on 30 pips, depending where your stop loss was moved up to, or if you'd have left it down here. But look at this, the market went up to nearly 80 pips. So you don't know this was the high, but again, you could have moved your stop loss up, protected 50 pips. So it's a great strategy that you can develop further to meet your own trading rules. But our trading rules, very simple. Previous day's high, we look for the break and a close above, a retracement as low as we can get towards this level, and then we put our buy in. Our stop loss is the previous day's low. So we're giving the market plenty of room to have the dips and wiggle, but great opportunity moving all the way up. What I would suggest before you use this strategy is go to a few charts, look at the charts and plot a couple of weeks about 6 months ago, and you will see 7, 8, 9 times out of 10 this strategy would have worked if you keep to the rules of the breakout trading. Hope this has given you some ideas for next week's trades. We're looking for long-term trading on a long on the Australian US dollar. It's in the consolidation area now, but it's got potential to go up a couple hundred pips before the end of the year. Any questions or comments, just let us know.